Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. And our guest for this week's show is wealth advisor and investment strategist Frank Hanna. Now, Frank is the founder and CEO of Revolution Xchange, an advisory firm that provides consulting and turnkey solutions to real estate owners that are considering a 1031 exchange upon the sale of their asset. Now, Revolution Xchange not only provides clients access to pre-vetted properties, but also works with them to help navigate through the sometimes arduous process associated with the 1031 exchange. And so with that, guys, I'd like to welcome our guest for today's show, Frank Hanna. Frank, how you doing today?
I'm doing great, Kevin. How are you?
Oh, excited to have you here, my friend. Excited to have you here as we just work our way through the holidays. It's January 2nd, and we got a fresh start here. So excited to chat about you and your business and learn a little bit more about what you have got, what you guys have going on over there. And so, but I'd say before we go into the, maybe the deep ends right off the cliff into DSTs and 1031s, let's talk a little bit about your background, Frank. I had an opportunity to read through your bio. You've done quite a bit over the years, and you got some pretty cool things, pretty cool things that you've done and they have happening with Revolution Xchange. So maybe tell us a little bit more about your background, yourself, and then also Revolution Xchange, if you would.
Yeah, perfect. Thanks, Kevin. So keep it high level and won't bog you down with too much information. But I grew up in the restaurant, hospitality, hotel space. Did that for years, so got a good kind of crash course on that side of the business, tax planning, those type of asset classes, and did that day to day operation for my family's restaurants, nightclubs, catering facilities. Realized pretty quickly that I didn't want to do that forever, and decided that I kind of wanted to segue into another aspect of the business, and had built a lot of great relationships by doing that job for years, and had gotten, as I said, it's some good exposure on overall financial tax planning side of things, the benefits of owning real estate, and basically kind of set up a side entity that was kind of a side job in the beginning, and then allowed me to step out of the day-to-day operations of the family business and build on those relationships to be able to give, the fast-moving entrepreneur objective, transparent, independent advice as it relates to, all aspects of real estate investment. But ultimately, taxes move the needle. It's not what you make, it's what you keep. So a lot of our consulting and advice we give is driven by taxes, right? So started that business probably 2009, and we've grown to over $1 billion in assets under management. I'd say almost half of it is syndicated real estate deals in a variety of different capacities, some of which being 1031 type deals, DSTs, and the like.
All righty. Well, fantastic. So yeah, no, I appreciate that background, and just curious as to making the pivot out of the restaurant industry, and it sounded like it was generational. Was that a tough thing to get away from, or was it kind of, man, I've had enough, I'm moving on?
It was tough. I joke, and I say it took me 5 years to like wiggle my way out of the day-to-day operations. My father was like just one of those guys that was like, "Hey, you're an idiot if you don't take the bull by the horns and run with this opportunity." And quite frankly, he was really upset when I left. So I managed to get out of the business, and it was tumultuous, 6 or 12 months trying to convince him that this was the right move for me. But I still tell him to this day, I'm like, thank God I'm still not there running those operations for you. But yeah, it's a family owned business, and we were button heads, and I am a big advocate and supporter for people that are successful in those type of businesses where it's a lot of hours, and the
Yeah,
beast
that's
never
it.
sleeps.
That's
Yeah.
it. Yeah, well, I think that's where my question ultimately derived from. At least a certain portion of it was just the difference of lifestyle. I mean, I
Yeah.
at a younger age, I tended bars, waited tables, things like that. But I mean, you get the initial exposure to that business, and you get to
Yeah.
meet. folks that have been generational in the business, right? For different places I work for.
Yep.
And just it's tiring, it's weekends aren't off, right? Like that's the busy time. And
Yeah.
it's a 12, 14, sometime longer hour a day, 7 days a week type endeavor. So anyway, just was curious there, but
Yeah.
I'm glad to see everything worked out and you got some cool things happening. So, let's talk about,
Yeah.
I guess first and foremost, you're not the first intermediary out there. There's many other different groups that have similar services to that of Revolution
Mhm.
Xchange. So maybe speak more specifically to what sets you guys apart. Like what was the challenge you saw or the opportunity that you saw that said, hey, I can do this a little better. I've got a better way to skin that cat.
Yeah, exactly. So we had some proven systems. We started investing in real estate, started in like single family homes, doing flips. Then we started doing single family home communities. We started doing essential retail, triple net lease, investment. We did hotels, industrial, you name it. And ultimately we felt like we were, really cognitive numbers guys, and we had a system we felt worked. So we're absolutely not the only game in town that utilizes tax solutions like Delaware statutory trusts, but I think any real estate deal you're in is dependent on the quality of the underlying asset, right? And the
Absolutely.
um, due diligence you do and putting together the deal. So in my business, you kind of, when you're in the financial services space, you affiliate with a broker dealer.
Mhm.
And although most probably give you access to some of these type of deals, it doesn't mean that they're the right deal for you. So we invested a ton of time, money, and energy kind of vetting the marketplace across the country and applied our systems to the deals that were out there and basically created what I feel is the most conservative, robust menu of options that are out there. We do have, at any given time, probably 15 or 20 Delaware statutory trust deals that meet the 1031 exchange criteria. And we have our asset classes that we really like. And they're in pretty high demand for somebody that's coming out of a 1031 exchange and can't find the right property. And sometimes it's the right fit, but it's not always the right fit for the investor.
Yeah, you just brought up a interesting point I'd like to hit on. Just and we don't need to go through the basics of what a 1031 exchange is. I think most folks that are
Yeah.
tuning in here have a general understanding of what that is and when to take advantage of it. And so I guess
Yeah.
more specifically, what are some of the advantages of a Delaware statutory trust over a single property 1031 exchange? So instead of selling my house, my
Yep.
rental property, and doing a like kind exchange into maybe a duplex or another similar type of residential property that I'm going
Sure.
to run and manage. I mean,
Yep.
what are some of the pros and cons of going the DST route?
Yeah. Well, I would say the pros are, again, it will provide you a complete tax deferred exchange, just like a
Mhm.
traditional 1031 exchange, but it'll give you access to potentially some higher quality institutional grade assets that, you and me might not be able to purchase ourselves outright. So it allows investors to pool their money into these syndicated deals and essentially get passive tax favored monthly income. So you get a lot of the benefits that you would normally, but you give up the property management responsibilities, which is typically one of the more appealing options, right? So these deals, I'd say, are more popular with the 50 and up crowd, people that have made some or created some wealth in real estate and are just trying to simplify things. So you can get rid of, the tenants, the toilets, and the taxes, and you can get passive tax favored income and the ability to participate in appreciation of the asset. Typically, where the rubber meets the road, and we determine whether this is the right type of fit for the investor is one. If you're a control investor, you like managing it, the property, and you want the ability to be able to sell at any given point in time, the passive DST or Delaware Statutory Trust option is not always the best option because you're stuck in kind of riding shotgun with us throughout the life of the deal, which
Mm-hmm.
has a projected holding period, but it's not set in stone, right? So you might be with us for 4, 5, 6, 7 years, depending on when we feel the best opportunity to exit the program is. So there's certainly a lack of liquidity, which you need to be aware of. But again, with our deals, you can typically go in as little as 50,000. So you can achieve incredible diversification. So when somebody comes back and says, "Hey, Frank, I don't necessarily want to be hanging in one deal for, that length of time," we have different types of deals that are staggered in projected length. And what ends up happening is we kind of have like a mirrored bond portfolio, if that makes sense, Kevin. So if we put in, $1 million, we might diversify that across 3, 4, 5 deals. And then typically once we get to year 3 or year 4, it's not uncommon for us to contact the investor and say, "Hey, we paid you, 5, 6% along the way. We are exiting and selling whether you like it or not. And you have the opportunity to do another tax deferred exchange into hard real estate. You could do another Delaware statutory trust with us or somebody else, or you can cash out and pay the taxes." So I think it accomplishes most of the benefits of a traditional exchange, but the major drawback is you give up
Yep.
control and decision making responsibilities.
So yeah, if you enjoy dealing with late payments, handing out notices, showing up in eviction court,
Yeah,
playing the conduit between all the handyman, repairmen, and vendors that need to come fix your unit, then if you enjoy that, then this might not be a good fit for you.
yeah,
It's right.
exactly.
I think there's an evolution that most investors go through. I went through the same thing, 2 decades ago, and ran built up a portfolio of single family properties. It got to the point where I had about 35 of them, where it was like,
Yeah,
what the hell am I mean, like it was way too much. It was overwhelming. Didn't have a lot of good systems
yeah,
in place, and got burnt
yeah,
out pretty quick. Hired some good people, but then realized that like it was just there was a better way to do it. Property management is not a sexy game. It's not even all that profitable of a game. It's
yeah,
I like to refer to it as a necessary evil. We have a fairly large property management company today, but it's because of our own portfolio. But it's not.
yeah.
It's definitely not the bright shiny object of the company. It's
Yeah,
just
yeah, very, very similar. We sold off
yeah.
our entire single family home portfolio and kind of scaled up in some bigger opportunities just to
Yep.
make it make sense. Because yeah, whether you've got a small community of a dozen homes or 100, it's the same type of headaches and responsibilities. But
That's right.
yeah,
So
some similar.
what the average length of your typical DST investment? I mean, is there an end all be all like term to where these things run their course, or is it
Yeah,
all
so
depend on
great
the
question.
sponsor and the deal itself?
Yeah, it depends on the sponsor. We have partners that will potentially buy out investors if they need to be, fit into a certain spot. I'd say on the low end, we have deals that are targeted for 3 years. That's kind of like our shortest deal. And then if you get into, more diversified triple net lease type tenant with long-term leases, those will go out a little longer. So those might be a 7 to 8 year type deal. But I'm glad you brought that up, Kevin. So as we can all relate, the real estate industry is kind of in uncharted territory, right? With compressed cap rates,
Mm-hmm.
rapidly rising interest rates, lack of inventory. So what we are seeing is people that otherwise might not be a candidate for a DST saying, "Hey, I've got an opportunity to sell my asset at a premium right now, right? I absolutely do not want to pay the capital gains taxes, but I can't find an asset to do a 1031 exchange." So what they're doing is using our short-term deals kind of as like a landing spot. I'll sell at a premium, let the market adjust, and let some of these sellers, come back down to earth with what they think their properties are worth, then reassess the market in the next couple of years. And their plan of action is to go back out into hard real estate. So I don't, we've gotten a ton of deals this year, which I think if there was a hard asset out there that made sense, that fit what they were looking for, they probably would have gone in that direction.
Mm-hmm.
But they're kind of looking at us as a landing spot, parking spot, whatever you want to call it, just to preserve the step up in basis.
Yeah. What talk to me about some of the what asset class is really hot right now? I mean, is multifamily and that and industrial, are they still the two like darling asset classes,
Yeah, I
or?
think I think industrial's cooled a little bit with
Mhm.
this high inflationary environment. Multifamily, I think, even though cap rates have affected that, I think the cost of home purchasing right now is so high, and I think that spread between the average cost of rent versus the monthly cost of rent versus the monthly cost of a mortgage for the same
Mhm.
exact size property is over $1,000 a month. It's never been higher. So it's pricing people out of the market. So I do think in the right markets, multifamily's gonna continue to be hot. I like self storage. In the right market, it's pretty recession proof asset class. I think office is definitely out. And I would say
Yeah.
hotel, we do a lot in the hotel space. I think they,
Okay.
they obviously took it on the chin during COVID. But I think there's still some real good opportunities out there to be able to get a decent price, for that type of asset class. And I was looking at your website. I love modular housing communities in the right markets, and I love build for rent. So build for rent, I guess, is still multifamily, but a different, kind of
Right.
niche there. Yeah.
Horizontal
So
multifamily.
yeah, exactly.
Yeah.
Give you a little yard to take your dog out. And no, so I would say there's built for rent, modular housing. I guess any facet of multifamily we're still big on. And I still think industrial is going to be good long term.
Hmm.
And then
Yeah.
hospitality and self storage, I still think
Got it. Yeah.
given the right opportunities are solid.
These investments, do they typically have debt tied to them? Or most of the time they all cash
Yeah,
acquisitions?
I'd say maybe half and half.
Okay.
So some of our deals have, fixed rate financing. We're not doing floating rate stuff. So we're getting pretty favorable financing opportunities. I would say what has changed over the last few years is the loan to value. So we're not borrowing as much on these deals.
Hmm.
It's relatively conservative. So I would say that's, on the DST, you kind of have to go in with fixed financing, and you can't adjust that, you know, mortgage long term. On some of our deals that are not DSTs and they're more, um, you know, limited partnerships or LLCs where people can come in with cash. Again, same thing. Some of them we're not financing, some of them we are. We've got a few deals where people come in and we kind of use investors' capital as kind of like a bridge loans, so to speak, to get some
Hmm.
short-term relief and give the investors a nice return, and then basically use that fixed financing to come in and take out the preferred investors. So
Got it. Got
we've
it.
got
Makes
a lot of
sense.
good options, all shapes and sizes and different timelines, because the common pushback on most deals is nobody knows what the future holds, and they don't necessarily want to be hanging out 5, 6, 7, 10 years.
Right, right. No, absolutely. I think you had answered my question. At the end of a particular DST investment, sponsor decides to sell the asset. Do I have the option to 1031 my proceeds again? Can I keep rolling that into other
Yep.
DSTs? Okay.
Yeah, so you have all the same decisions that you had coming
Got it.
out as you did going in, right? So you can do a complete tax deferred exchange into another Delaware statutory trust program or hard real estate. And again, the kind of running joke is swap till you drop or
Yeah,
deferred or die.
that's a good point. Is there another strategy outside of swap to you drop? Like I wanted to ask the question, you just brought it up before I had a chance to. So are there any
Yeah, I
other
mean,
is there other strategies outside of like, I'm going through my third exchange. I really, for whatever reason, I just don't want to exchange to another, hard real estate asset. And but ultimately now I've got this massive tax burden that's been following me along for these many, many years. What's the
yeah,
alternative
I
options?
Yeah, great question. So I'd say high level, really the only two opportunities are some level of like tax harvesting, right? So if you're going to sell out of a asset that's going to create capital gains, and you don't want to pay the tax, potentially you might have capital losses elsewhere that you can kind of
Mm-hmm.
tax harvest and offset that. There's other investments that are out there, qualified opportunity zones, where you
Sure.
essentially can take, instead of having to roll the entire investment and doing a traditional 1031 exchange, you can just take the gain and, typically a fraction of the total dollar amount. And there's still some tax benefits to that type strategy. But I would say, yeah, the common, for the wealthier people that don't need the money, almost always they decide to continue to defer. And again, if they pass away with the asset, their heirs can sell the asset after the date of death and get that complete step up in basis. So
Got it.
the tax is completely minimal. One other thing I'll add is, Delaware statutory trusts can be helpful for estate planning, right? So if you've got a hard piece of land, you leave it to your three kids, they ultimately have to come to an agreement on what they're going to do with that asset, right? One of them might want to keep the asset. One of them might want to sell it. One might be indifferent, but it can create, tension between the kids. If they
Mm-hmm.
pass away, they get fractional shares of the DST asset. So one could say, "Hey, Frank, this has been a great experience. I'm going to do another 1031 DST with you." The sister could say, "You know what? I'm gonna do a 1031, but I want to go buy a hard piece of real estate on my own." And the third sibling could say, "Hey, you know what? I'm gonna cash out and go, invest in something else on their own." So it is simpler, I guess, from an inherited standpoint on that type of program.
Got it. Got it. Are there any, speaking to like any regulatory risk associated with, 1031s with that, that section of the IRS code changing? Is there any, I know that was some chatter when the current administration got in office, and
Yep.
it just kind of, I don't know. I haven't really followed it too much. It's still here. It's still around. But I mean, obviously, you would
Yeah.
know much more than I, as far as, are there any, risks coming down the pike that we're aware of?
I don't think so. I feel a lot better today than I did a few years ago when they were hot
Hmm.
on it. So the 1031 exchange has been around for over 100 years. It's been on the docket for a number of administrations to cap it, limit it, take it away. I think of all the administrations that are out there and the bipartisanship of, different, you know, uh, parties that are out there, everybody typically has some amount of wealth in real estate. And I think they've acknowledged that capping that, taking that away would completely crater the real estate industry.
Yeah.
So even your, hardest pro tax legislators that are out there, I think they realize that that's not a smart move and that's not going to help things. So although they were hot on that, they've created some other language in these type programs that really came to light, a few years ago, the first time it was going around. But I'm not worried about it. I think we're good to go. But I would tell investors, I did have investors that cashed out, paid a ton of taxes because they just thought,
Mm.
hey, they might take it away, so I'm just going to do it anyway, which they've kind of got egg on their face on now that they extended it.
Gosh, yeah, yeah, that's interesting. I would not have expected there would have been like a frenzy of folks cashing out. I would have thought that maybe it just, kind of let it set, and ultimately if it goes away, it goes away. It just means I got to figure out an alternative solution.
Yeah, I wouldn't say
Next.
it was a frenzy, but I did have some people
Yeah,
that just were,
interesting.
doomsdayers that are,
Sure.
the world's going to end, and I'd rather cash out, pay my tax, and bury the remainder in my backyard. So
Yep.
I would say that was not the majority, but some people were just, they get hung up on the unknown of what's going to happen next, and I can't plan for the future because I don't know what the laws are going to be. We're a big advocate of taking current law and planning for today.
Is there any way to do a like a reverse 1031? Buy something now and then ultimately, well, I guess buy into a DST now before I've sold my exchange property, and then just basically do it in reverse. I know 1030
Yeah,
reverse 1031 exists, but like, can you also factor in a DST
yeah, you can.
investment?
Yeah, you can still do it. Again, I'm not a qualified intermediary. So the qualified intermediary is that unaffiliated third party
Hmm.
individual that holds the funds in that transaction. So we're more on the replacement side of things.
Sure.
Um, but you certainly can do a reverse 1031 exchange where, you purchase the property that you want now and then go to sell the asset. It's definitely a little more complicated maneuver, and it's a little bit more costly when you go to the qualified intermediary. And that's where I think it's critical to get the right firm that knows what they're doing, because there's a lot of intermediaries out there, and a lot don't know what they're doing on the reverse exchange side of things. So if any of your listeners are contemplating that, even though we're not intermediaries, I could certainly guide them in the right direction to the right people to make sure that works out.
Okay. Frank, is there anything else that we haven't maybe touched on today that you feel is relevant and of importance for our listeners to know about you, your group, what it is you guys do, anything that comes to
Yeah,
mind?
no, I appreciate it. Yeah, I think I honestly think we're a really incredible resource hub. Even if you're not in the market for a DST, or you're not in the middle of a 1031 exchange, maybe you're just looking to find capital. We're a great market maker for relationships for people that are either looking to borrow, buy or sell. And above and beyond that, outside of the 1031 DST business, we do a substantial amount of accelerated depreciation, tax favored, tax deductible type opportunities. So you and I, Kevin, probably think alike on a lot of fronts. And even though we're probably doing some of the same type of deals, confident that we could be a great resource for somebody that is just looking for a little guidance, regardless of where they are on either side of the transaction.
Yeah, with that, I mean, for those that want to learn more about you or reach out to you, where's the best place to track you down?
Yeah, so our website is REV is in Victor, X is in X-ray, wealth.com. So REVXwealth.com. Feel free to email me. It's Frank, FrankHanna at REVXwealth.com. If you go to our website, you can see some sample deals that are on there, get some quality information on different things that we're working on. But happy to send out a list of opportunities if somebody contacts me directly.
All righty. Well, fantastic. Well, Frank, I appreciate you joining us here today. It's been a lot of fun having you, and pleasure meeting you as well.
Yeah, Kevin, thanks. Enjoy the weather down in Tampa. I'm jealous.
We'll do. Okay, guys, thanks for joining us here today. That's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.